What we are doing on concentration is, yes, it is true that today real estate is about 60%, and our desire is to be at around 45%. So we need to reduce our exposure in real estate. And what we are doing is part of that exposure is in the form of shareholder loans that we have advanced to our real estate business. As they move to cash positive, especially through the sale of bulk land, they're using that money to repay their shareholder loans to us. And so if you look at the asset, there's a slide we had in the investor presentation, and you look at total assets to Centum, they have come down, our exposure, largely because they paid 3.75 billion of shareholder loans back to Centum in the period. The target for 5 years was 7 billion, and this is largely funded by bulk land sales. I think would have been higher was it not for COVID, because what COVID did is that we ended up with the lands register closing, and a lot of transactions got caught up. The second payout is from the profit potential on the infill projects. We had targeted 9 billion in 5 years. So far, what they have market validated and pre-sold as a profit potential of 4 billion. So they now need to develop projects with an additional 5 billion for us to sort of shift the funds back to marketable securities, and as we look for attractive opportunities to redeploy in private equity.